Welcome to the Daily Block. The top events happening in the past day in crypto and why they matter. Fast, snarky, and merciless. Because someone has to explain why your portfolio is either mooning or mourning. Binance teams up with Franklin Templeton. BNB spikes toward $900. Binance announced a strategic partnership with Franklin Templeton to build tokenization and regulated digital asset products. Franklin Templeton brings real institutional tokenization chops via its Benji platform and regulatory experience, and Binance brings global distribution muscle. Expect pilots for tokenized money market and asset offerings later this year, and markets already bid BNB up toward that sexy $900 handle. Why it matters for crypto investing. Institutional tokenization plus exchange distribution is a direct path to new inflows and native utility demand for BNB. That's a clear narrative traders can front-run or fade depending on timing. Risk counterpoint. Regulatory hurdles, slow product rollout, or a bearish macro day could sap enthusiasm and leave BNB exposed to a nasty retrace. Next up, meme coin civilization advances. Dogecoin ETF, Rex Osprey, DOGE, set to launch September 11. Meme coin ETF era begins. The first US Dogecoin ETF under the 1940 Act, DOGE, is slated to launch on September 11th. Markets are already pricing in heavy retail and institutional interest. DOGE popped on the news because ETFs are like a liquidity vacuum for whatever they list. This isn't the same as commodity-style spot funds. It's a regulated, easier access ticket into meme land, and that tends to bring giant, messy flows. Why it matters for crypto investing. ETFs channel big, easy-to-access demand. Expect elevated volatility, large flows, and contagion to other meme coins, and retail-focused tickers during and after the launch. Risk counterpoint. Retail FOMO can flip to fast profit-taking. If flows disappoint, the ETF could act like a sell trigger rather than a perpetual bid. Solana sees big institutional buying. Shorts get wiped at $220. Solana season? Institutional maneuvers like Forward Industries, $1.65b SOL acquisition and staking plan, plus multiple spot SOL ETF filings have pushed bullish narratives. SOL cleared $220, and about 17 million of short liquidations executed as leverage got steamrolled. With Solana's smaller market cap versus BTC ETH, corporate buys and ETP flows can move the price violently, and thin perp liquidity amplifies squeezes. Why it matters for crypto investing. If institutional spot/ETF demand materializes, SOL is primed for outsized moves. Great if you timed it, brutal if you're on the wrong side of a squeeze. Risk/counterpoint. Concentrated liquidity and stop hunts mean sharp reversals. Small cap dynamics make trend sustainability questionable without consistent inflows. Linear mainnet sequencer glitch during huge airdrop. 9.36b linear plus listings. Linear had a brief sequencer hiccup during its massive 9.36 billion token airdrop claim window, but the issue was resolved within an hour, and major exchanges like Binance and OKX confirmed listings. The distribution scale and immediate exchange support mean a gigantic new token float just hit the market with instant liquidity and listing arbitrage opportunities. Expect huge early volume, front-running, and some traders to scalp the chaos. Why it matters for crypto investing. Massive airdrops plus exchange listings equal immediate speculative dumping and short-term volatility, perfect for listing arbitrage and scalp setups. Risk/counterpoint. Post-listing dumps and wash trading on low liquidity pairs can trap longs. The early days are a minefield for unhedged positions. Macro worry meter. Bitcoin, Nasdaq correlation risk, and a Fed catalyst. Ecoinometrics warns that Bitcoin's historical correlation with the Nasdaq creates downside risk during tech mean reversions, and the current regime could lead BTC into deeper drawdowns if equities roll over. Short-term decoupling happens, but the upcoming Fed meeting and rate cut expectations are the macro fireworks that could move the needle. If the Fed disappoints or equities tumble, crypto narratives get overridden in minutes. Why it matters for crypto investing. Macro-driven moves can swamp crypto-specific stories. Position sizing and hedges matter, now ahead of Fed, CPI, and PPI prints. Risk/counterpoint. A dovish surprise could torch rate-sensitive shorts and spark another fast, liquidity-hungry rally. Timing macro bets is brutally difficult. Soft US PPI print lifts crypto, Fed cut odds rise, but BTC reactions remain mixed. August PPI unexpectedly fell by 0.1% month over month, nudging risk assets higher and boosting BTC, ETH, and Sol intraday as markets priced in higher Fed cut odds. Yet Bitcoin's follow-through has been choppy. Rallies after dovish prints are often faded, and momentum trades can blow out weak hands. Traders who jumped in on the initial pump found quick retraces and whipsaw risk. Why it matters for crypto investing. Macro prints are immediate trade catalysts, great for event-driven day trades or options plays, but expect violent reversals if risk appetite cools. Risk counterpoint. Data surprises are binary. Positioning into prints without hedges can get you wrecked fast. Corporate Bitcoin treasuries surge to 113 day. Public treasury plays are volatile. Corporate BTC treasuries are now around $113 billion total. And companies adopting balance sheet Bitcoin strategies have produced extreme equity volatility. Some stocks triple or halve inside weeks. Deals, pipes, and capital raises to buy BTC are creating headline narratives that can support price. But the equity proxies are highly levered and reactive to news flow. If markets sniff risk or raise liquidity concerns, those treasury names can sell off faster than you can say on-chain. Why it matters for crypto investing. Corporate buys can act as a price support narrative, but listed treasury vehicles are volatile proxies that amplify BTC moves and offer tactical equity trade ideas. Risk counterpoint. Corporate treasury strategies are vulnerable to accounting, regulatory, and liquidity drama. And equity moves can decouple from BTC in ugly ways. Airdrop pre-sale exploit flagged. Bubble maps finds possible 170 balances. Mike's Sybil attack. Bubble maps flagged a coordinated Sybil exploit on Mix Finance's airdrop that may have extracted up to $170 million using roughly 100 near-identical wallets. Mike's acknowledged suspicious behavior and promised fixes, but details are thin and trust takes a hit when anti-Sybil controls fail at scale. This is a reminder that airdrops are still a massive alpha source and an equally massive risk. Why it matters for crypto investing. Pre-sales and airdrops are profit hotspots, but also exploit magnets. Exploit headlines can trigger dumps and contagion. Always treat airdrop allocations as high risk with clear exit rules. Risk counterpoint. Projects can patch issues and recover, but reputational damage often reduces long-term community trust and token demand. Quick trader. Takeaways, TLDR. Expect headline-driven flows. BNB and tokenization narratives could see momentum. DOGE ETF and linear airdrop are short-term volatility magnets. Macro calendar remains king. Fed, CPI, PPI, and payrolls can flip the market any minute. Size positions and hedge into prints. Play airdrops with caution. On-chain forensics and exit rules are non-negotiable. Pre-sales are alpha if you survive the chaos. Mid-cap L1s like Sol are high beta. Institutional buys and ETF filings can create squeezes, great for quick profits or painful liquidations. If you want, I can convert these into a one-page trader watch list with exact price levels, support, resistance, and suggested tactics, or pull on-chain flow stats for Sol, Doge, BNB, and BTC to quantify buys and liquidations. Which helps you more? All right, hit subscribe if you like your crypto news with a side of teeth. I post daily market calls, snark, and the occasional honest, "Take your broker won't tell you." That's today in crypto, where the gains are imaginary and the pain is real.